Hey guys, welcome back to the channel. This is Future Trading with Mike, and today I'm going to answer a question that a subscriber asked in reference to trading zones and how do I clearly go about locating or finding, identifying, and drawing the actual trading zone each and every day as I do when I'm when I trade the live session here, trade the ES, which is the emini S&P 500 futures, and you can do this no matter what market you trade. But I'm a futures trader, so if you're a futures trader, no matter what market you actually trade, it will work hand in hand. So you always got to start off by finding the overall direction, and that's why I always start off with the largest higher time frame chart that I actually use when I'm day trading, and that's the 60 range chart. The 60 range chart is kind of in comparison to, I'd say, if you look at that compared to a 1 hour chart, you probably want to find some similarity. Um, but anyways, I like to use the range chart because to me, the range charts just look more cleaner, okay? So this video is, like I said, is more so about locating, identifying those supply and demand zones off the higher time frame in which I look for, okay, price moves into a supply area or demand area. If you're moving to a supply area, always think about this. Supply is an area at the tops of within a level where price is moving to the downside, meaning making lower lows and lower highs. So price pulls back to retrace back to that particular zone in a swing level where price was moving down to the downside. Okay, so supply is tucked away into the inside of that swing. Okay, of that lower low and lower high. Okay, so supply, I'm always thinking about shorts. Demand, always be looking for opportunities to buy. So I'm gonna show you an opportunity where you could have went short at. We'll first start off with that. So this is what I do step by step. Okay, so I look at my higher time frame, my 60 range chart. Okay, all right, we're going to go from the process of identifying an area, say in this case here, an area of supply. Okay, so when I say supply, think about going short. Okay, an area of supply. First, we're going to find that on the higher time frame chart. I got to see where there's an area of supply on the higher time frame chart where prices would trace back to it and move into that area to start looking for, okay, is price going to reject this area now? Then I scale down to my anchor chart, which is my lower time frame chart where I start marking my levels or my zones. Okay, so let's see here. I'll show you. Okay, this will be the first example. So on the 60 range chart, as price with this is from we're going to be looking at the supply zone from March the 1st. Okay, all right. So March the 1st. A supply area was created about 2 in the morning. Okay, now it doesn't really matter. I'm just using this as an example. Okay, because these type zones or areas, happen while we're trading, while we're asleep. Doesn't really matter. It's just price action. Okay, so price starts to push higher here. Looks like on the 28th of February. So it must have hit some area of support down here. Turns around, makes higher highs, higher lows. Higher highs, higher lows. It chops to the upside, right? All right, makes a high right here where this purple line is at, pulls back or retraces, then it turns back around, making a higher, swing up to the upside, making a higher high and higher low, higher high, right? So we have a high sitting right here. This rectangular zone right here, this is just me. Beforehand, I'm not marking this off, okay? So if I was to take this away, okay, I have this high sitting up here, okay? Price pivoted, it stopped, and then it turned to the downside, okay? All right, and what did it do? It broke structure on the downside. So it came up and made a higher high, higher low, higher high, okay? On this little swing to the upside, okay? Eventually it took out this high right here, okay? But what I'm trying to get at is this. You want to see price making a higher high, a higher low, and making swings to the upside, okay? All right, so it does that, pushes higher. Okay, boom. Now we have a high right here. Now I'll say, okay, price must be in some area to where it is going to reject. It's an area of resistance more so. If you look to your left-hand side of your chart, you'll see the price has got to be in an area. And plus, this is a 40 close beginning for. No, sorry, I'm sorry. This is for one, we're at a high volume area here. But okay, let's just forget about that. Okay, take volume out completely out of the picture. Price pushed up, made a high here, higher low, higher high. Okay. Now, what did it do? It paused. Okay. This is where you start to see rejection right here. Okay. Price turns around, And I always say this, look for rejection, meaning price breaking structure to the downside, okay? Price starts to break structure to the downside. This is where price is probably going to make some areas of supply, okay? So it starts to make structure to the downside. It does. It breaks this low right here, this previous low right here, okay? On its way down. Now, we have supply sitting right here. Now that price has turned around, granted, this is on a higher time frame chart, and starts to make structure to the downside. If you look at your 12 range chart, you're going to start to see the price is swinging to the downside, meaning making lower lows and lower highs. And it takes out this high right here. It breaks structure here, and then we're going to look at the 12 range chart at the same time frame on around March the 1st at 2 o'clock in the morning. Price had to start swinging to the downside, I'm sure, making lower lows and lower highs. So structure's being broken two ways. Price breaking structure, coming down, pulling back, making a lower low, okay? As well as breaking structure here where price was moving to the upside, okay? Now that this has happened, that price broke this low right here on the way down, okay? Now we have an area where we can classify as an area off the 60 range chart, an area of supply sitting here, okay? All right, let's just go over to the 12 range chart now on March the 1st, and let's see what we're getting. So I'm gonna take this line here. I'm marking the zone off my higher time frame chart now, okay? Now this, because price is pushed up, broke back, pushed higher, making a high here, and then turns around and breaks structure right here. This area right here, this low right here, is broke structure. Because price turned around and broke structure, meaning broke levels on its way back down, then there has to be an area of supply sitting up in here, okay? Off the higher time frame chart, I'll mark the area of supply, okay? When I see price pulling back into that area of supply, then I know we have a high probability of looking for a short entry, okay? All right, so here we go. We see price, like I just said, made a high here. It pivots. I'm gonna draw this. You guys got to be able to see this. High, high, low, a high here. Then what does it do? On the rejection here, this must be resistance. If you look back into the left hand of your chart, it turns around and breaks right at the bottom, broke that low right there. This low, matter of fact, I'm going to go ahead and I'll put a elliptical there, or ellipse there, to kind of show you. That low right there where price broke higher, pull back, push higher, then it pivots, turns around, it breaks this low right here as it is coming to the downside. You have to see price start to break structure as it's coming down, meaning breaking structure to the left of the chart, meaning, okay, push down, okay, pulling down, it starts to break structure on the leg next to it. The leg left to it as price is coming down. You got to see structure being broke. If it's breaking structure on the way down, back at the top, at the origination point, the initial point where price started to reject and swing to the downside, where it started breaking the first area of structure on its way down, there's got to be supply in that area, okay? And I know that, so that's why when I see, blow this up some more, when I see price rejecting this area and pushing lower, okay, I'll say, okay, prices come down now. It's broke the first area, the first swing to the leg left of price right now. As it's moved, where it moved to the upside, it broke that low on its way down. The first swing area, I should say this, the last swing area, price was pushed to the upside before it pivoted, okay? Push up, pull back, push higher, okay? This was pretty much the last swing on the 60 range chart as price was moving to the upside, okay? All right, it does not push any higher, meaning make another swing to the upside, okay? It rejects, pushes lower. That last swing on the push to the upside, price came down, it pushed, it broke the low of that last swing. When it does that, I know I have supply sitting right back up here to the tops, okay? All right, so now that price has broke that low of that swing, that last swing to the upside, when it retraces back, so I mark my zone. My zone, the area I'm interested in, which is going to be the supply area, okay? There's two parts to this. We're marking the area of supply off the 60 range chart, and I always mention this in the videos, okay? Got to first identify if you tap into or retrace back into an area of supply. In this case, in this example, price retraces back to that area that I drew, okay? The area of supply is the zone, okay? To me, the area of supply is that when you see price breaking higher, that last green candle right here, and this push to the upside, okay, is the area of supply, okay? Before price starts turning or turning and pivoting and pushing lower, where it breaks this lower here, that swing, okay? Price retraces back to that green candle pretty much, okay? In the body of that green candle right there, okay? It does it right here, okay? Pulls back into it. When price taps back into that zone right there, this is where I look over at my 12 range chart, okay? And then I want to start seeing is price starting to break structure to the downside, and then we look for the pullback, okay? So step one, identify the area of supply. Identify a area of supply. In this case here, price pushing higher, making higher highs and higher lows. It stops, it does not make a higher high, meaning it doesn't make another swing to the upside. It rejects at some area of resistance in the left hand of the chart, okay? Now that I see this happening right here and price move lower, where this little ellipse circle is, breaks below this swing, the last known swing on the push to the upside, price moves lower, breaks the lower end of that swing, I know there's got to be an area of supply sitting up here, okay? Supply means nothing more but accumulation of selling. In this case, a lot of selling, okay? So I want to mark the zone on the 60 range chart, that being the last large candle. To me, the last large candle on the push to the upside, okay? Out of the swing to the upside, okay? When price made this high right here. Not the red candles, but the green candle. When price pulls back to that green candle, price taps into that area of zone, that zone there. Mark your zones. I use these rectangle blue boxes. You can be whatever color you want to choose. But once price taps back into that area of supply, second step. This is where I switch over to my 12 range chart to start to see price structure broke to the downside. Okay, so prices tap into that area. Okay, so at what time did price pull back on the 60 range chart to this area of supply? At 9:45, okay? So now that price has tapped back into this area of supply at 9:45 on March the 1st, okay, we're going to now switch over to the 12 range chart, step 2, to where we have to see price starting to break structure to the downside, okay? So this same blue area, this area of supply is the same area on the 60 range chart to where I showed you where price pulled back into the area of supply off the 60 range chart, okay? 940, 945, this area right here. Price, when it turns back around, okay, making higher highs and higher lows on the pullback or retracing back to the area of supply right here, okay? Taps back into it. Step 2, what do I say? Now we have to see price on the 12 range chart. We're looking at the 12 range chart now. Start to make structure to the downside. I want to start seeing breaking levels, okay? Taps back into the area of supply on the 60 range. Pushes down, pulls back, pushes lower, okay? All right, so now we tap back into the area of supply. Price pushes lower, pulls back, pushes lower. Breaking structure on the way down, okay? You got to see it doing two things. Breaking structure, pushing down, pulling back, makes a lower low. It's breaking structure on the way down, but it's also taking out structure to the left-hand side of it. When I start to see that, I need to start classifying the area where price can pull back. So first, it's got to make a low, okay, on the 12 range, pull back, okay, making a lower high, breaking lower, okay. All right, so let's take a look. Low, lower high, lower low. What did it do? It broke structure, broke a low on the swing to the downside, broke structure here to the left of it as well. So on the 12 range, step 1, like I said, once we tapped into that area of supply that we blocked off and drew on our 60 range chart, step 2 is we got to start seeing price break structure twofold, meaning structure being broke to the downside and structure being broke to the left-hand side, meaning that price made a low, pulls back, Now I got to see it make a lower low. Okay, boom, identify. Step 2 has 2 parts to it. It's got to break that. It's got to make a low, pull back, make a lower high, and make a lower low. Step 1, part 1 of step 2. Also, we got to see it break structure to the left hand, or the I call it the leg to the left side of us. Okay, it's also broke a low. Okay, rule 2 or part B of step 2. It's also broke the low of structure on the way down. Now that it has done that, now that it has done the 2 parts of step 2, okay, all right, we look for the retracement. As simple as that. This is where we look for a retracement. It pulls back, okay, pulls back, and this is the pullback or retracement trade. On a pullback, this is where you can look for, look for the trade entry, okay? So you got step 1, which is first identifying if an area of supply or demand on the higher time frame chart, okay? Step 2, now that we blocked off an area of supply or demand on the 60 range chart, the higher time frame, now step 2 has 2 parts. Part A, we want to see price, in this case here, because it's tapped into an area of supply, make a low, pull back, make a lower high, and then make a lower low. Part A of part 1 of step 2. Part 2 of step 2 is we also want to see price breaking structure as it's moving down, breaking structure to the left hand side where price is swinging to the upside. It's done that. It's broke the first or area or level right here when it came down on a movement down right here to the left hand side of it. Okay, all right. On the pull, so once it's done and it's accomplished those two steps of part A, part B, or 1 and 2 of step 2, however you want to say it. Once it pulls back, okay. Once it pulls back, this is the retracement, okay. All right. Now you won't get much off of this retracement trade. Possibly, just depends. Could you take an entry here? Yes. Price pulls back to the area of resistance on a retracement right here, this level here that took out this swing right here to the left hand side of it. If you went short right here, you got to be careful because the low of that swing on the low when price would trace back, the low was sitting right here, so price can stop right here. Okay, and not just that, but we also have areas of you have areas you have area of support right below right here, guys. So you have support right here. All right, when I'm taking that trade, probably not because we don't have much area right there. So we can look. That's this one we continue to look for. Look to see if there's another opportunity to do so. Okay, so right here would have been an opportunity. Price moves lower on a pullback. Okay, all right. It moved. It did it again. It broke a low here, broke structure, pull back, pushing lower. Okay, did it break structure here? No, it didn't really break structure right here, but then it comes back down. Let's see. And makes a low here. Okay? Makes a low here. So you have to be careful, like when price is breaking lower, making these swings to the downside. You don't have much area. If you take these little pullbacks, like right here, you don't have much area because the low is sitting right here. Price pushes down, pulls back. You don't have much area because the low right here. Okay? So you want to look for, even once you've accomplished step 1, step 2, price breaking structure to break structure to the downside, or breaking structure twofold on the way down. Okay, swing and making lower lows and lower highs, as well as breaking structure to the left. You got to also gauge, okay, how much area on pullback will I have if I get into an entry. You're not going to have much because the low is right there. Okay, I'm not saying it won't continue pushing lower, but you're taking a chance. Same thing here. Price pulls back, the low sitting right here. Okay, so I'm looking for an opportunity where I have a bigger area to trade from, and that area is where when price continue pushing lower and then it really pulls back. Okay, this is what I want to see. I'm not going to take these little trades like this because I know I probably could get stopped. Okay, now I've had the experience. Sometimes I may take those little entries and just pick up a few ticks, but it's not worth it for anyone who's starting out trading. Look for the bigger opportunity on a bigger retracement to an area. Okay, in this case here, so now we have an area that's formed on the 60 range, an area of supply where there was rejection neck. Now we have an area on as well on the 12 range. This even gives you, is more powerful and gives you more confluence. Okay, let me show it to you. This area right here. Here is an area just as well on the 12 range. Okay, now price reject off that 60, that supply area off the 60 range. Now we also have major confluency also with an area of supply on the 12 range. When price pulls back to this area right here, why this area right here? Because this movement to the downside, price pulls back, breaks lower, taking out structure here. Okay, when price comes back to that area of supply right here. Okay, why is this an area of supply? Because for one, price pushes lower. This is the swing to the downside that takes out this swing right here. Okay? All right? Remember I said in step 2, you got to see price making structure to the downside and breaking structure where previous to where price is pushing to the upside. So it does it within this swing right here on the way down. Pushes lower, pulls back, that green candle there, turns around, okay, on a pullback, on a little tracer here, breaks, makes a lower low. Breaks that little low there, breaks, makes a lower low, takes out structure here, okay? Takes out this swing right here. When price pulls back, look at this area right here. This is a bigger retracement, okay? From here, this low, back up here to the area of supply, which is that green candle, the body of that green candle right here, if you can see it, a little small candle right there. Blow it up so you can see it. When price comes back to this area now I have supply on my 12 range chart. This is a major area, really a high probability trade for me, okay? All right, so when I see price pull back to this area of supply on the 12 range, I already know I got supply on the 60 range, it's rejecting. Now I got supply on the 12 range, okay? This is definitely a go time for me. This is where I'm really interested in saying, okay, this is going to be a good move. I got plenty of room here, okay, with this major retracement going back to the tops up here, okay, off of this swing to the downside, which this swing here to the, on the movement to the downside with structure, moving to the downside, but also breaking structure where price is moving to the upside, okay? All right, this swing broke this swing here to the downside, meaning taking out this low. Price retraces back to the area now of supply on the 12 range. When that red candle right there pretty much closes, guys, I'm short. When that red candle closes, I'm short. And honestly, you can take this trade here from this area here at 60 pretty much back down to, I'd say, around between the 53 and maybe 52 area, okay? So that could be a 10-point move right there if you get into it right. Maybe 8 point, just depending on how you get into it. Really, no. So if you look at, no, I take that back because if the bottom of that red candle, if you got in right there at 58, say for instance, back down to say, let's just say 53, okay? So, what did I say, 58, back down to 53. So you're looking at 5 points, maybe 6 points, just depending, 5.5 points, somewhere around there. Solid trade entry, okay? All right, and that's one contract. That's if you're trading one contract, especially as a beginner, that's enough, okay? So there's, like I said, step 1, you always got to accomplish and mark off a zone off the 60 range chart that's either an area of supply or demand. In this case, it was an area of supply off the 60 range, okay, which was where we're at. Sorry about that. March the 1st, this area right here, okay. This is where price pushed down, saw it in the 12 range, pulls back right there, okay, and rejects this area, okay. It pulled back into the area on the 60 range. Boom, taps into supply. Look over at my 12 range. Okay. Price pulls back into that area right there. Boom, we're at it. Okay. Rejects this area. Oh, excuse me, right here. I'm sorry. Right here. This is the area right here. All right. Rejects this area and starts to make structure to the downside. Making lower lows, lower highs, and lower lows. Okay. It broke this swing here. It's also breaking structure to the left-hand side. The first time it starts to break structure to the downside and it's breaking structure to the left of it, this is where I'm going to start looking for, okay, do I have enough room on a pullback to actually get into a trade? Now, this opportunity here, because price pulled right back to resistance right here, wasn't enough for me to really get, it's not enough for me to get to a trade because I get to a trade, it closes a red candle right here, price is going to stop right here because we're right here at the low. Now, let's take this arrow off here. Okay. Now, if price were to pull back deeper, let's show you. Arrow, here we go. Pull back and made a deeper retracement back to this area of a swing, and then a red candle, yes, it would have gave me plenty of opportunity to come down to the low right here. So if price would have came all the way back up to, here's a high volume area, high volume node, say 63, okay? 63, red candle close. I probably could have got, picked up at least 2 points off that trade right there. At least 2 points, okay? All right. But because it just pulled right back to the area of resistance right here, I don't like the trade right at the area of resistance on the move to the downside, okay? I like to see price pull back into the swing, meaning the swing is the price move to the downside, made a low, made a lower high, lower low. Now it's forming structure to the downside, and it broke structure to the left side of it, okay? Now on the pullback, I don't want to see price pull right back to the neck of the swing, I call it, right here at the neck. I want to see price pull back into the swing itself when it was moving to the downside where selling started taking place, and that is a small area of supply off this movement to the downside, okay? Okay? But because it didn't do that and it stopped right here at the neck, it doesn't give me much room to actually trade, okay? So this is why I look for as price continue chopping to the downside, low, lower high, lower low, lower high, lower low. It pulls back significantly, back to this area of supply. Boom, I look for that as an opportunity to get in because I have a nice area here where I can take a trade short, taking it back down to 52, okay? Simple as that, all right? Let's try to cover one more example here. Now I'm going to show you an area of demand, okay? Here's an area of demand. Here we go. This is on March the 2nd. Price is pushing higher, okay? All right, making swings. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then moves up to a higher high. Okay, so we got a swing to the upside. Okay, movement to the upside. Price turns around. There's got to be some area of resistance to the left hand somewhere on the chart. I'm not focused on that right now. What I'm focusing on is this area. Okay, I'm going to move this away. Okay, when I see price push up here, made a high, pull back. Okay, higher low, then breaks higher. Let's do this with an arrow. Higher high, pull back, higher low, higher high. Okay, swing. Okay, in this swing on the upside, what did it do? It took out, let's see here, this swing right here, where price was pushed down, pulled back, made a lower low. Okay, price pushes up, pulls back, breaks higher, taking out this area, this swing here where price is moving to the downside. Okay. Now, when I see price taking out, pushing up, making a higher high, higher low, higher high, forming structure to the upside, as well as breaking structure to the left-hand side of the chart, this leg here to the downside, breaking that swing, taking it out as it moves higher, okay? When price pulls back, at that point I'm marking my zone because I mark my zone step one because price made that swing to the upside, breaking higher, pulling back, breaking structure, taking out a high here. This is on the 60 range chart. Not only did it take out this high here on the move to the upside, but it also, the most important thing is breaking structure and taking out levels to the left-hand side of the chart right here, this leg where price moved to the downside. It took out this swing right here, okay? Now, clearly, I know there's got to be an area of supply, demand within. The area of demand is going to be found within the swing that took out the swing to the left-hand side of the chart. The swing that was moving to the upside that took out the swing to the downside. Okay? Now, always remember an area of demand and supply is tucked within the area of the last known swing that took out structure. Okay? So, the swing was right here to move to the upside. The area is right here. That red candle right here. Okay? That red candle right here. When price pushed up, pulled back, pushed higher, making a higher high, taking out this area over here, just move to the downside, that swing to the downside. This now is the area that I classify as demand. This is a supporting swing coming out of the swing to the upside that took out structure to the left-hand side of it, okay? That red candle right there is the last known area of a pullback right here before price started accumulating, where buyers stepped in to take the market higher, making a higher high, taking out structure over here. When price comes back to this and taps into this area of demand right here, step 2 is where I go over to my to my 12 range chart. We're gonna do this. We can see it on the chart. This was at when price came back to tap into that area of demand off the 60 range chart. I'm looking for rejection to happen now. This is out on March the 3rd at, let's say, 11:20, 11:30. Let's see what time frame what time that is on the we should be able to find it really easily here because it's on March the 3rd, March the 2nd. We'll go over to March the 3rd. We should start to see it here shortly at a 11 something. Here it is, right here. All right, now price is tapped into the area, okay? All right, we saw it tap into the area on the 60 range chart. Now we're looking at the 12 range. What do we want to see price do on the 12 range chart? We want to start seeing it reject and start moving to the upside, breaking structure. Breaking structure how? Meaning swinging up, pulling back, making higher highs on the way up, and taking out structure to the left-hand side of it. Meaning taking out highs where price was moving to the downside, okay? Now here, we don't particularly get any kind of movement like, let's see, like this here. Price pulling up, pulling back, making, breaking, pushing up, pulling back, breaking, making higher highs. We don't get that. We get a V-shaped reversal right here, and price shoots to the upside, okay? Now, where's the area of, at this point here, I say, okay, now that price is broke structure to the left-hand side on the movement back to the upside, there is demand sitting down here at the bottom just as well. The area of demand is right here at this red, is right here at this red candle down here at the bottom. So we could mark that right here. Okay, we'll mark that right there. I don't know price. Okay, here we go. So somewhere, we'll take a look at it and see. All right, so here's what goes on. Price rejects, V-shaped reversal. We don't get this kind of structure to the upside. V-shaped reversal, boom, price pushes hard to the upside, okay? Takes out structure to the left as well, okay? Now we look for price to pull back to the area of demand. We got an area of demand on the 12 range chart. Does it happen anytime within that day? It does not, okay? I'm just giving you an example because there was many more opportunities probably throughout that session. But we're just looking at this area of demand in particular and just take this as for what it is in this example and just kind of use it as the same setup when you find other areas of demand or other areas of supply, okay? When does price pull back into this area right here of demand on the 12 range, okay? It happens right here towards the close of the day at at 3, say 340, 345, okay? Got that? All right, so here we go. Great opportunity to go long, okay? Great opportunity to go long. Demand here in the 12 range, okay? Price, let's show it to you. Pushes higher and eventually retraces back to this area of demand. When price pulls back or retraces back to the area of demand, I look for the rejection here, okay? I do have some swings to the downside here that could possibly, that price could possibly pause at. But the thing about it is that when I look to the left-hand side of the chart, price didn't really start taking out levels on the way down to the downside until right here. It's on the 12 range chart. Now, if you look at a lower time frame, you're probably going to see what's breaking little levels or micro levels as well. Once this candle here closes green, okay, closes green, I am long for trade. This is off the higher time frame, because I know price will probably come up and at least test. Let's see. Let me take a look here. At least this area right here, okay? But I know it probably push higher than that, okay? But what the point I'm trying to make here is that price tapped into a 60 area of demand on the 60 range, and then we also had a setup because we saw the rejection. Two parts of step 2 is we want to see rejection on the 12 range, meaning price breaking structure to the upside, making higher highs and higher lows in this case, and breaking structure to the left-hand side of the chart where price was chopping to the downside. So when it first broke the area, the first swing to the left hand side, taking out the swing to the downside, meaning taking out the high right there. You know there is somewhere when it pulls back, there's going to be an area of demand on the 12 range as well. And when price pulls back to the area of demand on the 12 range, that's when we look for the opportunity to go long. Okay. In this case, this is a V-shaped reversal. Okay. It takes a while for price to come pull back to that area of demand here. Okay, which is down here. But once it clocks back into or pulls back into that area and it rejects out of this area, I'm long. Okay, I'm long because I've got confirmation twofold. I got confirmation on the 60 range. I got confirmation on the 12 range. I got two areas of confluency. I got demand on the 60 range, rejection off of that, the higher time frame, and I got demand off of the 12 range as well, my anchor chart, my lower time frame. Okay, pull us back into that. There's major confluency here to price could push higher. Okay, and then if you look at the volume profile, price pulls back here. Okay, we got little areas of volume here, volume notes here, but above us, this is where the meat of the meat of the volume is at. Okay, on the move to the upside here, pulling back to the area of demand. Okay, on the 60 range and 12 range, price has a high probability of moving right back to the mean, an area where it's comfortable at being at, where a lot of volume is right here. Okay, so that's how you mark off and look for your, first off, looking for an area, if area supply, a zone, a supply or demand on the 60 range, or 60 range to start with, step one. And then on the 12 range, you want to start to see price making structure or making structure and breaking structure. Making structure means if it's in an area of supply, what do you want to do? You want to start seeing price making structure, meaning making a low, lower high, another low. Okay. Then you look to the left of that to see if price is breaking structure to the downside as it's moving lower. Okay. Then the trade does not happen until price pulls back. Okay, pulls back to the swing area where price just moved down and where it broke structure. Okay, same thing here with the move to the upside. We want to see price mark off an area of demand on our 60 range chart. Okay, I showed you that. Okay, then we're here. This is the area, this big box here, this rectangle here is the area on the 60 range chart, was the area of demand. In this case, we don't get this kind of movement to the upside where price breaks up, pulls back, makes a higher high as it's breaking structure higher. Okay, but what it does do is V-shaped reversal, and you're going to see things like this happen. Okay, V-shaped reversal, but it does break structure. It doesn't make structure on its way up, but it does break structure as when it pushes higher, breaks the structure right here. Okay, these swings to the downside. The first swing that it broke on its way up was right here. When it does that, okay, then you say there's got to be an area of demand below. The area of demand is this red candle right here. Okay, when price comes back to it, I am as ready to go long as possible. Okay, and when that green candle closes to the upside, I'm long. Simple as that, guys. So step one, look for demand or supply on the higher time frame and mark that zone. Step two, scale down to your lower time frame, your anchor chart, your 12 range. Okay, all right, and start to part A of step two. On the 12 range, when you look at your 12 range, is to see if price is making structure to the upside. Making, in this case here, off an area of demand, if it's making a higher high, higher low, higher high. Okay? All right? Then part B of step two is it breaking structure to the upside? Meaning breaking structure as it's moving higher, breaking structure to the left-hand side. The first time it breaks structure to the upside, meaning breaking this first area or first swing where it moved to the downside, and breaks it pushing higher, look for the pullback to an area of demand. Okay, mark it off as soon, mark that area, that zone off. When it makes this structure, if it does make structure to the upside, okay, and breaks this structure over here, all right, then look for the retracement back to that area, okay, and look for the rejection to go long. All right, it's I don't know how to explain it in any further detail, guys. I mean, really, to be honest with you. You got to be able to see it. So hopefully this video answers some questions, answers, not just one individual, because I got an individual that emailed me about this yesterday, and hopefully this answers his question. If it doesn't, which I'm almost 40 minutes into this video, and I don't know how to really I can maybe clarify a few more things if you're having a hard time maybe seeing something, but send me shoot me a comment. But hopefully, I gave some key pointers away, some key hints, some key things that you can take home and study off of. You have the video, watch as many times as possible. Got any questions, just send me a comment, whatever the case is. But this is how I trade. Trade basically looking for rejections off of supply and demand areas and looking for breaks of price breaking structure and then pulling back to that area. So step one, like I said, I keep reiterating is look for if price is in the area of supply and demand off the higher time frame of 60 range chart. Step two, price has got to be making structure and breaking structure. Okay. Once it does that, step three is the pullback to that area of structure where price broke structure. Okay. So hopefully you understand that. You guys understand that. So I'm gonna leave it for what it is today, guys, and that's gonna be it. I appreciate it. If you haven't, sub to the channel. It's your first time watching. Hopefully you found some value in the content today, and go ahead and hit that sub button for me, that subscribe button, that red button, as well as click on that bell icon. That's the post notification to make sure you never miss one of the uploads. I'll see you guys in the next video. Today is April the 3rd, and that's all I have for you today. Take care, and I'll see you on Monday.